few days of Sam Bankman-Fried led third largest cryptocurrency exchange FTX filing for Chapter 11 bankruptcy protection, several details on investment that are emerging now has investors worried of losing their investment. Complex web of investments are at the root of FTX downfall, which is feared to have widespread effect of across the sector. At top of the list is FTX's investment in research arm Alameda that caused downfall of $32 billion empire built in just 4 years. The trading arm has blown up $10 billion of FTX's investor fund. Since its inception, FTX has invested in various ventures, particularly in Metaverse. They are Yuga Labs, Circle, New Protocol, Sui, BlockFi and others. FTX participated in Yuga Labs' $450 million seed funding round and Circle's $440 million financing round last year. Mr. Labs, the Sui Layer 1 blockchain developer, raised $300 million from FTX. FTX also participated in Tiger Global-led funding activity for New Protocol, a smart contract enabled by Layer 1 blockchain. It also invested in Aptos Labs, BlockFi, Helium, Limit Break, Multicoin Capital, Chipper Cash and Mythical Games among others. Robust funds FTX managed collect from marquee investors helped the exchange to secure valuation of $32 billion within 4 years of its inception. It wooed blue-chip investors including Paradigm, SoftBank, Sequoia Capital and Singapore's Temasek. Sequoia and Paradigm marked down their investment to zero following the FTX's bankruptcy filing. Alameda's clumsy investment cost FTX $10 billion in losses. Investors rushed to pull out $5 billion of FTX, resulted in the Bahama-based company initiating bankruptcy proceedings. Investors started withdrawing funds from exchanges at a rate not seen since April 2021. Nearly $3 billion in Bitcoin withdrawn over the past 7 days. New data from on-chain analytics firm Glassnode shows the number of wallets receiving BTC from exchange addresses hit almost 90,000 on November 9th. Last year, Alameda Research invested at least $20 million in investment firm Paradigm. In return, Paradigm participated in the exchange's Series B and C funding rounds and owed nearly 7 million shares of FTX as of August. Crypto.com CEO Chris Marszalek said the company mistakenly sent $320,000 in Ethereum to another cryptocurrency exchange, Gate.io, on October 21st. The amount makes up for 80% of its Ethereum holdings. In the interview, Marszalek reiterated that the exchange has a strong balance sheet and said its exposure to FTX was limited to $10 million. CrossTower is working on proposal for the asset of bankrupt crypto lender Voyager Digital, which announced reopening of bidding process after FTX US, the original winner in the bid, filed for bankruptcy. Gallios Capital, the recent hedge fund, caught off guard after close to half its $200 million assets were trapped on collapsed crypto exchange FTX. Alexander Dreyfus, the CEO of Chiliz, a currency option for blockchain-backed products and services, is allocating 38 million CHZ to individual users who could not withdraw their funds from FTX. Users can now receive compensation of up to $10,000 as part of this initiative. Galaxy Digital has $77 million exposure to FTX, of which $47.5 million is currently in the withdrawal process. The exposure amount represents a small fraction of the firm's $1.5 billion in liquidity. Multicoin Cap, TrueFiDAO and Bybit Official too invested in FTX. 10% of Multicoin Cap AUM are stuck in FTX. TrueFiDAO has $12 million exposure while Bybit Official has $100 million exposure. Alameda purchased 100 million BIT tokens in November last year by swapping 3.36 million FTT tokens. Last week, BitDAO raised requests for proof of funds amid mounting concerns after FTX hot wallet showed fewer than 100 million BIT tokens. Of the $14.6 billion in assets Alameda held as of June, $5.82 billion was in FTX's native FTT token or other FTT collateral. Solana was Alameda's second largest holdings with $1.16 billion in unlocked SOL or locked SOL. The revelation of Alameda's potential need to raise capital and sell Solana may have helped drive a steep drop in the price of Solana to $13.46, down more than 43% in the past 24 hours. Bankman-Fried publicly supported Solana and helped launch Serum, a decentralized exchange running on the Solana blockchain. Investors faced anxiety over the FTX's crisis and failed to understand the repercussion it may have in the long run. It will take time before we know the exact size of the entities involved and the investors' involvement directly or indirectly. However, it is almost certain that the fallout will be very ugly. That's all in this special story. This is me, Ruchi Sharma, signing off. Do like, share and subscribe to 3.0 TV. Have a great day.